Hello, I'm Adam Grimes, and welcome to Market Life Chart School. This is being recorded March 20th, 2018, but this is not really time critical. This is a topic and a video that you're going to be able to come back and look at. It doesn't really deal with current market conditions. And also, I should say this is a special topic. So our topic today is, and this is not just a normal chart school lesson, this is more of a mini class. Think of it like that. And what we're going to look at is reading the intraday stock action. So you can think of this in two ways. If you were a day trader, if you were an intraday trader, then obviously this is very important. And if you are that type of trader, much of your focus is on trend days. Trend days are days that open at one end of the range and close at the other. There may be some back and forth, but there's really not a lot. What we're looking at, or what we're looking for, are these directional days. And just to orient yourself to the chart on the screen, because this is what we're going to use today. This is a 15-minute chart of the day session S&P only, and you can see the day ticks down at the bottom. So the space between these ticks is a single day. That's one way to see the day, but another way is to look at these blue and red lines. And what these show you are the high and low of the day, and they change throughout the day. So you can see here the market opened and the range expanded throughout the end of the day, and then you can see very clearly the next open is here. Usually that's pretty easy to see. Sometimes, like maybe in this area, it's a little bit more difficult, but you'll get the pacing of this. And if this looks very strange and hard to read, I promise you'll be used to it by the time we're done. And I'm using my standard indicators. This is a 15-minute chart, and this is a 20-period exponential moving average, and we just have Keltner channels set around that exponential moving average. And the exact parameters are not important. The idea is we just want some idea if the market is near an intermediate term moving average or far away. That's one of the ways we read momentum. So this is a trend day. I'll zoom in so you can see a little bit more clearly. Here was a day that opened on the low, and really, if you were just imagine that you have a crystal ball and you knew to get long on this open, there was really no point in this day that you endured any pain. That's kind of a perfect trend day. There are some other trend day patterns. I would call this a trend day. We had a little bit of consolidation on the open, really strong trend, and then kind of trickled up to the afternoon or to the close. In reality, it's not quite as simple as trend a day or not. When I was day trading very actively, I broke the day down into a few other variations. But really what we care about is whether, just for the purpose of this video, whether it's a directional trend day or more of a rotation day. And here's a rotation day. Here's another rotation day. I'll zoom on this one. What we see in a rotation day is generally the high and low are revisited more than once. Not always, but you can see here we've touched the high kind of twice, several tests of the low. And some of these tests may push outside a little bit. Some may not get quite back to the high, but basically, just be clear, that's what we're looking for. We want to know, on one hand, we're looking at these directional days, whether they trend up or down, and on the other hand, we're looking at these kind of sideways consolidation days. So the question, if you're an intraday trader, is twofold. First of all, can we identify anything that will give us an edge to market direction? That, to me, though, is secondary to the idea of, can we identify the tone of the next trading day? In other words, are we likely to have a trend day or a consolidation day? And what I want to do here is go through several days, and I want to encourage you, if you do this, if you go back and look at a chart, you're going to deceive yourself. It's very, very easy to look at a chart and to say, oh, I would have done this, I would have seen this at the time, but you can't. You'll deceive yourself whether you mean to or not. So what I'm going to do here is go through a few days, and I'm going to show you the chart that I made at the time. So each of these charts you see, this chart you see was made on the close of the trading day. That's the 12th. These are the marks. These were my comments. And I also read you some of my comments from my notes. So here's what I said for the next trading day today. Breakout mode today. Breakout mode, meaning that we are expecting a trend day. Breakout mode again today. Expect trending action today, especially on a break outside of yesterday's high and low. So this is the context going in to the next trading day. What did we get? So this is the next trading day, and it can be a little disconcerting, but we were here. All of the marks change when we change to the next day, of course. So look what happened. We had, if you remember on the previous day, I'd outlined the high and low, and we came up and tested the high, slammed down to the low, through the low, had a little bit of a pullback, and these levels, so don't be deceived, I drew these levels after this close. These were not on the chart. What we had on the chart at the beginning of the day was still two pretty good levels, but they were different levels. So that was the action going into this day. Now, this is a trend day. This is not a super spectacular, extra fancy trend day. How did we know that we were likely to have a trend day? Well, what I saw that encouraged me to look for a trend day was this very tight range. That is enough. We had all of these things that we learn in terms of market dynamics. Look at it like this. So we have a trend up, we have a sideways consolidation, we have another trend up, roughly a measured move objective. Nobody's going to pull out a ruler and measure, but just realize we had an upswing, and then we had another upswing. This upswing lost momentum into a sideways range, and the previous day was a very tight range. That, in fact, is the number one consideration. If the previous day's range is tight, we are more likely to have a trend day. So when we had this tight range day, I was looking for a trend day the following day. By the way, if we go back a couple days, look at that. This tight range day set up this trend day, and the gap opening here would have given you some early indication that we would have had trending action. So after this day, I identified this level, which is roughly the low, a little bit below the low of the previous day, and then another level lower. And my note said, be on guard for downside follow through. Watch these levels closely. What actually happened? Here is what actually happened. So the previous level was here, and basically it held. We did have a little bit of downside follow through, but there was no particularly strong edge. And that's one of the other things that I want to impress upon you. If we are looking at trying to understand the dynamics for the next trading day, realize that there's a practical limit to how good we can be at this. You're not going to be 100%. If you think you're 100%, you're fooling yourself. Maybe you'll be right 60% of the time. But what you should be able to do, you have one or two of these glorious trend days a month, and you should be able to have a pretty good idea that one of those is coming. In my experience, there are many times where I say we have the setup for the trend day that it does not trigger. So you have the potential for the trend day, you watch, you know pretty much based on the action on the open whether you're going to have it or not. But you will see many days where you have these kind of, look here, you have this tight range day, the next day maybe you're looking for a trend day. It didn't really happen, and you knew that on the open. We opened down, went right back up in the previous day's range, so we don't really care here. So we might have said, okay, pretty tight range day, maybe we're set up for a trend day. And in fact, you opened above the high, and I might have been looking for a trend day there because we've had this little 2-day consolidation after this run. See that? But then we're not really able to continue to make highs. We kind of stabilize around the previous day's high, and you know pretty soon, an hour or two into the day, that it's not one of those rock and roll trend days. And the next day, you did have a good setup for the trend day. So that's how you think through it. Based on what you see on the chart right now, what do you think I said about the next trading day? Keep in mind, these levels are, in a way, you get a little bit of a cheat because these levels are drawn at the end of the trading day. My notes for this day say no clear intraday bias. Edge tilts slightly toward further consolidation, but only slightly. So what I'm saying here is that there's no strong edge. There's a slight edge towards further consolidation, which is in fact what we had. So we had another tight range day here, kind of near the low, as expected, but it's not really spectacular information you can make good use of. Okay, so what I say here, what do you think? Take a look at it. So it's a very tight range day. And my note from the day says breakout mode tomorrow with good support for a 2 to 3 day thrust in either direction. So what I'm saying here is I don't know which way this market's going to break. I can make a case for up or down, but I do think there's a very good chance if we break, we're likely to run 2 or 3 days in that direction. And also, there's a very good chance we are going to break and we're going to watch yesterday's high and low as this current day's high and low. That's where these levels come from. I'm just looking at the high and low is to trigger trades. And so my whole note actually has one other piece. Breakout mode today with good support for a 2 to 3 day thrust in either direction. Let early morning action set the tone for the day. So that was the setup going in. And what did we get? Nothing. So this and there's a good example of we have this really great setup. We're tightly coiled for a breakout day. And watch the open. Well, where do we open? We open pretty much unchanged. Does that seem to you to be very compelling? That doesn't tell you on the open that, hey, something's really going on. We really need to pay attention. And look, I had identified the previous day as this high and low, and we never got outside the high and low. So if you were looking to pursue a trend day, you had no reason to really be involved. Now, though, look, what do we have now? An extremely tight range day. I can go back in the middle of the chart. You can definitely find other days like this. But based on recent action, what has happened? The volatility has contracted. And those lines I just put on the chart don't actually mean anything technically, but just to show you that the volatility has contracted. And you can see, a kind of a good indication here is just to look what's happened with the moving average. Moving average has gone flat. And look how close the market is hanging out around that moving average. Very tight range day. So we are clearly in breakout mode the following day. Now, this day's range is so tight that in this case, I would like to use the previous day's range. So I'm using the same level as the potential breakout level. What do we get from the market? Well, a pretty spectacular trend. Look at the open. You have this big gap down for the open, and here was this low was our level. So look, we opened just under that level, and right on the open in the first 15 minutes, drive. We drove off of the open. And so that brought us down to this level. Looks very good, but it was drawn on the close, so that level is not terribly impressive. But this was the action. This is a strong trend day coming from this breakout, triggered very nicely. And then tomorrow, what happens? So my note for the next day says breakout mode led to a sharp move yesterday. This is being written for tomorrow. So I'm saying sharp move from breakout mode. Watch levels today and expect mean reversion. Now, you might go back and you might say, wait a minute, your note from a couple days ago said that any move was likely to extend 2 to 3 days. That was what I said. But based on this failure of momentum, and the significant bounce, sometimes we get a bounce at the end of the day that is kind of a bull flag or bear flag setting up another move, and that was not the type of move we had here. What I saw, particularly when I was watching intraday, I saw a lot of short-term momentum climax and momentum rolling over, and it looked to me, based on the factors that I follow, like the end of the move. So what we had for the next day was watch levels, expect mean reversion. So I'm saying to expect, when I say expect mean reversion, it's to expect the opposite of that type of range day. And look what we got. This is actually yesterday's actions. This is being recorded in real time, and we have a very tight range day. And so my comment for tomorrow is that let's see, breakout mode today, but be mindful of the FOMC. So the FOMC is likely to kind of keep a lid on the market until the announcement, and then we may have some volatility. But you can see it's kind of the same idea, right? This alternation between, if you just look back at the chart, maybe you can see it now. So you have this alternation between ranging activity, and it's not always 1 to 1 to 1 to 1. We actually came from a period of several days of ranging activity. Trend, then what? Range. trend, a day and a half. And some of these, like I said, it's not quite as simple as black and white. So this day is a little bit of a half consolidation day, consolidation, consolidation, trend, consolidation. What are we setting up for? Very likely another trend. So I hope that's useful. I hope that's interesting. And the point of me going back and using charts I did at the time was just so I could not alter history. I want to show you what I saw on the close. And you see, it's not terribly difficult to make these assessments to get a little bit of edge for the next trading day. So go to marketlifetrading.com, check out the course. We talk about some concepts like this, how to put all of this stuff into action. And we do have a couple subscription plans there that if you're learning to trade, developing your own system, might be something you might want to take a look at. But regardless, the trading course is massive and nearing completion. We're coming in about 25 hours of video, several hundred pages of PDF documents and exercises. So it's a pretty rigorous thing that can really give you a solid foundation. marketlifetrading.com. Thank you very much.